It's time now for the Premier Podcast, the official real estate video podcast of Premier Realty Group of West Tennessee. We have 3 offices to serve you in McKenzie, Paris, and Huntingdon. Online at prealtygroup.com. Now, let's get started with today's Premier Podcast.
Welcome back to the Premier Podcast, the official podcast of Premier Realty Group of West Tennessee, with offices in McKenzie, Huntingdon, and Paris. I'm Kelly Green, the marketing director for Premier Realty Group. My co-host is Gary Wicker. He's the principal broker in our Paris office. Hi, Gary. How are you?
Hey, Kelly. I'm good.
And our guest today is the owner of Premier Realty Group and the principal broker in our McKenzie office, Susan Bradberry. How are you?
Good morning, Kelly. I'm doing great.
We have talked a lot in recent podcasts about things you need to do in purchasing a home, specifically on securing the loan.
Right.
Today we're going to talk about the things you don't need to do when purchasing that home. It's almost the 10 commandments of real estate.
10 commandments of a loan, or getting a loan and buying a home, yes.
Did you go up onto a mountain for 40 days and 40 nights to get these?
No, I just walked into the office of a local lender.
And there they were.
And there they were. And he said,
right,
here are the 10 commandments. Share them with your home buyers. And so that's how I came by them.
Yeah, and these are really good. I've looked over these. Should we just go right down the line from 1 to 10?
Let's do. But first, let's set kind of the stage here. When you apply for a mortgage loan, you're getting accepted for that loan is based on certain criteria. Mm-hmm. And I call these the big 3 of those criteria: your credit score, your work history, and your debt to income. Now, those can vary depending on your loan. Getting into those, I don't want to get into the detail of those because that would be like a separate podcast in itself.
Right.
And that's something we probably should do at some point, discuss those three things. But once that's set, anything that you do to change one of those can kill your loan. And the thing that buyers need to know is that underwriting is going to check those criteria the day before or the day of closing. And if they do, and anything has changed, you're dead in the water.
Yeah.
And I've seen it. Well, I had it happen this week, and I'll talk about that as we go over these.
Okay.
But number 1 on the thou shalt not list is thou shalt not change jobs, become self-employed, or quit your job.
All right, let me ask you this.
Mm-hmm.
Let's say you're about to close on a home. Maybe you're 2 weeks away from closing on a home,
mm-hmm.
and you get a big job offer. It's a big raise. They want you there in a week. Should you put that off?
Yes.
Really?
I think you should.
Okay.
Well, now let me give you this example. I had a couple who lived in Memphis. They were buying a house in this area. We had the contract. We were ready to go to closing. The husband had retired from a company in Memphis and had retirement income from that. He had taken another job after that and was still working that job. And so he had talked to me about, that when they got moved up here, he was going to find a job up here, something that he really didn't need to work, but he wanted something to do that he could have fun with or enjoy. He quit that second job like a couple of days before closing. We walked into the attorney's office that morning, and I had to tell them, you're not going to buy this house.
It all fell through.
It fell through.
Wow.
Fell apart. Their furniture was on a moving van. They were living in a hotel room. Their house in Memphis had been sold and was occupied. They had nowhere to go.
2 days before closing.
Yep, the day of.
Oh, mercy.
The underwriter had pulled that credit. They look at everything.
Yeah.
The whole loan, they rethink it.
Okay.
Like a day or so before closing.
Again, number 1, thou shalt not change jobs, become self-employed, or quit your job.
Well, and self-employed actually has its own set of things
problems
that
in
right,
itself.
right. So you
Yeah.
certainly, that's one of the things that you certainly don't want to step out of a job and become self-employed at that point.
Right. Yes, because that, like you said, that has its own criteria.
I think number 2 is an obvious one, isn't it?
Thou shalt not buy a car, truck, or van. It
But I
may
need
be
to-
obvious to you, Kelly, but it's not always obvious to young home buyers.
But I need that truck to move my stuff in.
Exactly.
We've heard that.
I need that truck. I want that truck.
What if you're paying cash for that truck?
Ooh. We'll talk about that on down
Okay.
on down the
All
list.
right. All right.
Yeah, okay. Number 3, thou shalt not use credit cards excessively or let current accounts fall behind. I had a loan closing fall apart just this week over that very issue. The young lady, we've been working on this since January. Finally got it ready to close. And when they checked, like the day before closing, she had run up charges on her credit card. That changed her debt to income. And that changed one of the criteria. And she didn't get to buy the home. My seller, we've been working on this since January. We're not going to get to close. She's devastated. The buyer had been out money on home inspection, appraisals. She's devastated. Both agents are devastated. Everybody devastated. Just because she ran up debt on a credit card.
Right.
You cannot do that. You cannot. Once you get a loan approved, you need to just sit tight. So you can wait 30 or 45 days for buying that truck. Or,
Tie yourself to a chair and
Right.
don't move.
And you know the loan officers, I'm having trouble with that too.
Right.
The loan officers we've had in have talked about debt to income ratio on the front end. I mean, when you go in to apply, that's one of the first things that they look at is that debt to income ratio to begin with.
No, the big three.
The big three. So right, absolutely.
Number 4.
Thou shalt not spend money you have set aside for closing. Okay, if you've got money set aside for your closing cost or your down payment, and you spend it for something else, a vacation or whatever, and then you don't have it, it's not going to close.
Unless it's buried out in the backyard in a jar and nobody knows about it.
Oh, well, but if you suddenly find money out in the backyard in a jar,
There you go, more red flags.
That's a red flag.
Absolutely.
It's
I
that's
just
on the list.
recently got off the phone. I mean, within the last 15 minutes, and we were talking about the fact that we needed to raise the sale price to get closing costs included. That for some reason didn't come out when we were initially looking at the thing, and that's what we were talking about. The government looks at everything. I mean, it's a matter of $1,200, but the government looks at everything, and they're going to want to know where that extra money came from.
Yeah.
Mm-hmm.
So you can't bury it in the backyard and bring it in because they're going to ask the questions.
Or not where it came from, but where'd it go?
Right.
Right.
If you had it one day and you don't the next, they're going to want to know where'd that go.
Well said. Number 5.
Thou shalt not omit debts or liabilities from your loan application.
What does that mean? Leaving something out that you shouldn't?
That you owe on and you don't
don't show it.
Don't show it. You've got to disclose everything.
All right.
And that's how they determine your debt to income. So then if they determine your debt to income based on what you told them, and then all of a sudden they find out, oh, you owe this for this, it's all a balancing act. And those 3 things, they've got to be in balance. And if anything happens to throw them out of balance, you are not going to buy that house.
Gotcha.
So it's just so crucial. These things are really, really crucial. Thou shalt not buy furniture. And
Number
if you
6.
don't think that doesn't happen,
Yeah.
you are wrong.
Has that happened to both of you guys?
Yes. Well, I not necessarily to me, but I have a friend that it happened to that was actually prepared to move into the house, and come to find out he bought furniture and nope.
Oh, we've got a new house. Let's go on down to Ashley Home Store and
Right.
let's buy a house full of furniture.
It's common sense.
Yeah.
I would do that.
And now it's reversed. You got a house full of furniture with no house
No
to
house.
put it in.
Yeah. You got a truck full of furniture.
That's right.
All right. That's number
Yeah.
6. Number 7.
Thou shalt not originate any inquiries into your credit. Here you go. You want to buy a vehicle. You shouldn't be doing that in the first place, but you go to the car lot and you're looking at buying a vehicle, and when you go, they are going to pull your credit, sometimes 10 and 12 times. And every time they do, that is going to lower your credit score. You don't want any inquiries on your credit.
What else besides buying a vehicle would cause an inquiry? I guess buying furniture if you're paying for it with credit.
Anything
You go
like
into
that.
the department store and they offer you 10% off today if you apply for a credit card.
They
There
pull
you
your
go.
credit.
Right.
Wow.
Right.
So many little things that you don't realize.
That you do not realize. It's this, yeah, so many.
Okay. Number 8.
Thou shalt not make large deposits without checking with your loan officer. So that's what we were talking about, that money
But you
in
would
the
think
back.
that would be a good thing. You're making a deposit into your account.
They want to know where
it
that
came from.
money came from.
Yeah.
Yeah, it's a paper trail. It's follow the money. It's just,
Red flags.
red flags.
Okay.
Yeah,
Number
red
9.
flags. Thou shalt not change bank accounts.
Looks fishy. Looks shady.
Yeah,
Looks
yeah.
suspicious.
Just don't do it.
Right.
Just don't change
It's a
bank
little
account.
late in the game to be changing bank accounts. Yeah.
That's right. That's
All
right.
Number 10.
And thou shalt not co-sign a loan for anyone.
Which brings up something interesting. I don't mean to interrupt you here, but my dad drilled into my head 3 things from an early age. Number 1, choose your friends very carefully. Number 2, always pay your debts. Number 3, never, ever, ever co-sign a loan for anyone.
Yeah.
So 2 of the 3 that he drilled into my head are on this
Right
list.
here, yeah.
Right.
Right. Well, when you co-sign a loan for someone, that becomes a debt to you too.
Yeah.
People don't realize that. A little bit off the subject here, but if someone's getting a loan and maybe they need a co-signer, and we had this happen. One of my agents had this happen, and the loan fell apart. Well, it didn't fall apart. It just went south because the parents refused to do what they had said they were going to do, because they didn't realize when they co-signed for their kids to buy this house that was on them too. And they said, oh, no, we don't want that debt. But it became their debt, you know.
Wow.
So, you don't want to co-sign loans for anybody if you've got a contract on a house.
Very valuable information here. We should hand these out. You know, we should have on our front desk, there should be a stack of these.
When you walk in the front door, here you go.
Right.
Yeah.
What about just simply using a credit card? You know, just for purchases. Maybe you're at Walmart and you want to buy some groceries and you just put it on your credit card. Should you stay away from that as well?
I think you could do that without any problem. I think it's running up any big stuff on your credit card.
Yeah, the stuff that you would normally use a credit card for, it should not be a problem. Especially if the thing is that you're not building that debt and then not paying it off.
Right.
Yeah, if it's the revolving credit card that you're actually using, keeping your interest rate paid off, down without it, the interest on the money builds up, just like the debt does. And if you keep it on that same level, you're paying it monthly like you normally would without running that debt up, you're probably okay there.
Gotcha. And if anybody has any questions about any of this, they can obviously call Susan, call you, Gary, or call their mortgage lender.
Right.
Yeah.
Absolutely.
Yeah. And most mortgage lenders, I think, will counsel their clients about this. But the mortgage lender on the one that fell apart this week, she had counseled this young lady and counseled her, and she didn't listen.
It's so tempting to make those purchases.
It is. We just want what we want when we want it.
Yeah, and you get so excited about moving to that new home, so you start thinking, how am I going to decorate the home? I want this, couch. I want this TV. I want this, bedroom suite. You want it all.
Right.
But you just got to hold off, don't
Right.
you?
Right. Yeah. So once that loan is in place, it's based on certain criteria.
Yeah.
And if anything happens to change one of those criteria, then,
Gotcha.
Now, the people that theirs fell apart because he quit his job, they could have gone back, start the loan process over, and I'm sure he would have had good enough credit and good enough income to get a loan, but that was going to be 30, 45 days. Their furniture's on a moving van. They're in a hotel. Not a good situation.
All right. Any final thoughts on 10 Commandments of buying a home before we move on to something else here?
No, I think we
covered it. Yeah, we covered a lot of ground pretty quickly.
Yeah,
but the good thing is you can rewind this podcast and watch that again.
Yeah, and also if you get an itch to do some of this, just call your real estate agent and she'll talk you out of it. He'll talk you out of it.
That's exactly right. All right, I want to talk about something called Indian Lake Gated Community in Cedar Grove, Tennessee. I think it's one of the best kept secrets in the area.
It really is.
Now, it's gorgeous, and the people that live there know about it, and the people that are thinking about buying there know about it, but a lot of people don't know about this, and we have got some building sites there that are absolutely gorgeous.
Right. Indian Lake, I got involved in Indian Lake probably in 2006, 7, something like that. It's right outside Cedar Grove off of Highway 424. It's built around about a 100 acres fishing lake. There's waterfront lots, there's water view lots, there's lots that are not away from the water, various prices, some absolutely lovely homes that have been built in Indian Lake. People live there that have come from all over the area, really nice, warm, friendly people, inviting people that invite you into their community. So, yeah, I think it is a well-kept secret. A lot of times I'll mention Indian Lake to someone who lives around Carroll County and has all their life, and they're like, well, what is that?
Yeah.
So, yeah, it's...
When I started working here a year ago, I had, of course, worked in Carroll County for a dozen years in radio, and you mentioned Indian Lake to me, and I had never heard of it.
Right.
And you were working within 10 miles of it.
I was right, just about right next door to it.
Right.
Yeah, so it's a very well-kept secret.
It is, and it is a gated community, and there are certain guidelines, restrictions. I think they're strong enough to keep things nice, but not so strong that you would be uncomfortable with them. There is a homeowner's fee of $525 a year. So anybody wanting information on Indian Lake, give me a call. We've got lots of nice lots.
Yeah, and if you're thinking the lots are outrageous, if you think, well, it's probably a $200,000 lot. It's not. I think they're affordable. I think they're reasonable.
Yeah, they are.
Very much so.
Yeah, they are.
You can go to prealtygroup.com or just call Susan directly. Can I give out your cell phone number?
You can.
731-415-3321.
That's right.
It's always a pleasure having you on the podcast.
Oh, thank you, Kelly. Pleasure to be here.
Gary, any final thoughts for Susan Bradberry?
No, ma'am. No, sir.
Thanks for being on, Susan.
You're just welcome, Kelly. Thank you, guys.
Great job.